Bruce Jones, and he's the president of TaxWealth, and they are located in Newport Beach, California. Bruce, tell me a little description about your business and what you do.
Okay. Well, TaxWealth itself has been around for 23 years now, and we are a tax analysis and solutions research company that's couched in the financial planning process itself. So what we do, not only for our own clients who are property owners, business owners, owners of just about any type of capital asset, we also function in coming in as a support capacity to CPAs, attorneys, other financial advisors, real estate professionals, business brokerage professionals, in helping solve their clients' tax concerns to maximize their profit and income at sale. There are 4 approaches to tax planning. Now, I've always remembered them through this acronym of DEBT, D-E-B-T. As you're paying your taxes each year, you're reducing your debt to the government. D stands for deferral. That would be like a 1031 exchange in real estate. Could be a 401k, it could be an IRA, it could be any other type of what is called a qualified retirement plan. And there's other areas in regards to deferral that could be looked at. Secondly would be the E, that's eliminate taxes. There's 3 approaches to elimination of taxes. One having to do with tax credits, which is a dollar for dollar reduction off the tax, not off the taxable income. Very powerful. Secondly would be if you're selling your personal residence, you have, for a married couple, they have up to $500,000 tax-free that's coming to them. And then thirdly is through charitable tax planning. So we have deferral, we have elimination. B stands for becomes. Now, that's not really the word I'm looking for, but I need the B so I wouldn't mess up the acronym. But B stands for becomes, or actually the word is conversion, where you're converting one thing into another. An example of that for real estate property owners, for example, is a thing called cost segregation. That's the ability under tax law to literally change the character of the components that are tied to the property that qualify for this, from real property that has a depreciation schedule of either 27.5 years if it's like apartments, multifamily, or 39 years if it's commercial, like the building we're sitting in now, and change those components to personal property, and thereby accelerating those benefits to 5, 7, or 15 years. Now that gives the property owner more tax benefit immediately that they can use to apply against taxable gain on other assets they may want to sell, or it gives them an instant increase in cash flow tax-free. And then lastly is T, and that's transfer. And through the years, the IRS has taken a lot of the transfer techniques away. Most of them, in my view, fall within the charitable tax planning field and a few other places.
Can you give an example of what you've been able to accomplish for real estate owner or clients?
Okay, let's go back to cost segregation for a moment. Had a young lady who inherited her father's estate. Part of what she inherited was a 1/3 interest in a strip center in Downey that her father owned with 2 friends for over 40 years. Her 2 new partners were completely depreciated out, so they had no tax benefit, but under the law she gets what is called a step up in basis to the value of the 1/3 interest of the property, which was her father's, and the value at the time of his passing. Well, cost segregation ended up giving her $182,000 plus in tax savings, which is the same thing as an equal amount of new cash flow tax-free.
Wow.
Another example, aside from cost segregation, had a person who was selling $1.4 million rental in Newport Beach. He's owned it for just shy of 30 years, has severe tax problems, not only with capital gains taxes and the depreciation recapture taxes, but he had a thing called mortgage over basis, which means if the mortgage to be paid off at close of escrow is less than what his net basis in the property is, that being what he originally paid for it, plus capital improvements minus depreciation, all of that was taxable as ordinary income. So in his case, had he sold it traditionally and paid off the mortgage, he would have had to come out of pocket to pay all the taxes because there wasn't enough equity in the property to pay them all. We fashioned a solution for them to where we solved that problem. And we deferred all the capital gains taxes and other taxes that would have been paid for the year of sale. We deferred that for 30 years. And through a third-party private lender that we have established, provided him a near equivalent amount of the net sales proceeds up front, tax-free, closed escrow.
Wow. There's a lot of information there that you know that a lot of people don't know out there. How can they get a hold of you?
I have a toll-free number. This is good anywhere in the country. And that's 1-800-300-4723.
Okay.
And I offer a simple conversation about their concerns. There is no charge for that. And what we want to do is find out what their real concerns are, allow them to understand what the concerns are, and up front, without cost or obligation, at least get a clear idea as to direction that could be looked at, and then they are armed with the information that they need to move forward appropriately.
Very good. I appreciate your time. Bruce Jones, TaxWealth, based out of Newport Beach. Thank you.
Thank you.